Thank you again for coming in here. My name is Abuga of Danclare Financial Group. And today I'm going to talk about the 7 tax saving strategies for healthcare business owners who are looking and wanting to pay less in their taxes. My goal today is to do the following. Number one is to walk you through all the strategies to save at least $10,000 to $9,000 in taxes this year. My second goal is that all this works even if you are already working with your CPA, your EA, your tax preparer, or your bookkeeper that is helping you in saving on taxes. And my other goal is that how can you start doing everything today? Who is this for? If you're a business owner who pays more than $30,000 in taxes every year, this is for you. You are frustrated with having to give your strategies all planning your deductions to your current tax professional or to your current CPA. This is for you. You are looking to build wealth for your family, a legacy for your family. Again, conversation is for you. Number 5 is that you are tired of overpaying in your taxes. How many of us are tired already paying taxes, writing tax checks every year on the 15th or anytime it's done and you have to write this check, or having the payment plan? This is for you. Why is it different? We believe that it is your right not to overpay on taxes. It is your right not to overpay in taxes. We know that most CPAs are not tax strategists. There's a difference. They are only tax accountants. And the question is, what is the difference? The difference is that the tax accountant, they prepare your past. They prepare your taxes for the previous 2, 3, 4, 5 years. That is their job. And then at the end of the day, they give you and say, this is your tax liability. So they focus on compliance. While tax advisors, all tax strategists, people like me, we plan your future. We are thinking forward. How can we save? How do we plan before Uncle Sam comes in and says he wants to take your money? Have we planned it correctly? So that is where the difference lies. Then you ask, who is this guy that is talking about this? My name is Abuga, as I said earlier. I have more than 25 years experience in accounting and financial services. I've worked in many companies. I have been involved in business and wealth advisor. Now I'm currently a tax strategist for healthcare business owners and healthcare professionals, the nurse practitioners, the MDs, the doctors, and everybody who is in healthcare who is paying a lot of taxes. This is what I have dedicated my life so that I can help many people save on their taxes. What is really this that causes you to pay more on taxes? Number 1 is what we call improper entity structure. The other factor is missed retirement strategies. The other is missed deductions. And finally, missed real estate investment planning and structures. Now, you ask yourself, what does this all mean? When we have an improper entity structure, is when we are not having optimum tax filing elections. How do you structure a business that it is saving you on taxes. The other part we find all the time is the mismanagement of your LLC formations. We all run, once we start running the business, the very first thing we look for, how do we register your business? And the best or the simplest way to do is to form your LLC. But many times there is mismanagement in the formation process. Now, when we talk about missed retirement strategies, what do you really mean? We're talking about not maximizing your retirement contributions, because we all know one day we're going to retire. Are you maximizing your retirement? Not utilizing employer contributions. Properly utilization of the employer contributions is going to help you reduce your taxes. Many a times is that we are not contributing to our retirement at all. The other thing we talked about is missed deductions. Asset deductions. Are you making sure that every asset that you have that is operating in the business, do you have the deductions for it? What about the vehicle you're using for the business? Do you have proper deductions for it? What about the equipment that you use in operating your business? Do you still have proper deductions for it? Now, we also look at missed real estate investment deductions, not leveraging your real estate losses towards other income. Your Schedule E, how do you connect it so that it's not a pass-through, that you can be able to deduct those losses to reduce your taxable income, therefore reduce your tax liability. Now, not using tax savings to invest into real estate. After you have saved them, and how can you reinvest in something that again is not going to allow you to pay taxes and continue reducing? And by so doing, you're compounding your wealth, you're compounding your growth. So we want to help you avoid missing these opportunities and stop overpaying in taxes. It is very critical. We have 7 strategies that, as I began from the beginning, and we're going to walk through them today. The first strategy is an S corporation. What is an S corporation? An S corporation is a form of an LLC that has tax benefits. In the past, we have seen clients save a lot of money. The average is about $25,000 a year in taxes just by having your S corporation set up. We have spent a lot of time helping business owners restructure their businesses and save on self-employment taxes. The strategy number 2 is setting up an accountable plan. An accountable plan is an agreement you're making with your business and you. You can ask your business to reimburse you for the expenses that you made on behalf of your business. Now, the question is, how does it work then? The reimbursements are made under this as a taxable, deductible business expense. The strategy number 3 is leveraging your retirement accounts. We all know that we're going to retire, but then how do we use a retirement account as a planning to help us reduce on taxes? By investing in something like a Sol 401k, you can use it to lower your taxable income, which will lead to less in tax payments. Here is an example. Let's say you made $100,000 last year, and you chose to invest $5,000 into your retirement account. Therefore, $95,000 is what is only projected for taxable income. Strategy number 4, we are looking at cost segregation. Buying properties can help you lower taxes through things like cost segregation and accelerated depreciation. This means you can get more tax savings sooner than later. Why do we say that? When we do cost segregation planning, we are working on your property and looking for those things that we can shorten their lifespan. Therefore, we reduce it upfront as an expense. Therefore, you are getting your savings sooner other than projecting it 27.5 years for residential property, or let's say commercial property 30 years. Within the property itself, how do we make sure that we have captured those things that don't last for 30 years? That is where we talk about cost segregation. Strategy number 5 is master's rule. I love this one. Master's rule, this is where you rent your own home to the business for up to 14 days without having to report that income to yourself from your rental property for tax purposes. How does it work? First, the thing you have to look at is to check what is the average rent in your area. Number 2 is to have an agenda for your business. Document minute meetings every time you're meeting within those 14 days, and then write it off as an expense. And the 14 days, you can spread it over a period of time, as the total is 14 days when you're renting the home. So you're meeting quarterly, you can have quarterly meetings and deduct the number of days as long as it gets to 14 days in a year. Okay. The 6th strategy is the one I love most, hiring our kids. How do you make sure that you're hiring your kids? And how does hiring your kids help you as a tax savings strategy? As the business owner, you can hire your kids and lower that tax liability. And how does it work? First, you have to keep the records. Number 2, you have to give your kids a clear job description and an assignment and probably the hours they're working, and then use reasonable pay. After you've done that, then deduct it from your business. We're able to walk you through how do you structure that in your payroll and how you're going to reduce it by using what we call the family management LLC. Finally, the last in the list is Section 179 deductions. This is whereby when you're investing in capital expenses, you can be able to deduct these capital expenses to lower your taxes. And instead of doing 15, 25 years, or depending on the structure, or 7 years and other, how do you get 60 to 100% of that capital expenditure deducted in the year of acquisition? That is the 7th strategy that we use to help our clients reduce their tax liabilities. Summary. Number 1, we talked about moving your LLC into an S corporation as the strategy number 1. Number 2 is setting up an accountable plan whereby the expenses you pay on behalf of the business, you can have the business reimburse you. Number 3 is leveraging retirement accounts. Number 4 is investing in real estate. Number 5 is master's rule. Master's rule, as we said, this is where you're renting your house for 14 days to your business without declaring that income during the tax returns. Number 6, my favorite, is hiring the kids. Then finally, number 7 is what we call equipment deductions that we can use to lower the tax liabilities. Okay. Now, question for you is, Daniel, what do I do next? Where do I go next? What is my next step now that you've given me all these instructions? How do I implement it? What am I supposed to do? So, implementing these strategies to maximize your tax savings should be your first priority. Review this training again and again to ensure you're getting all the best strategies you can for your tax liability to reduce it. Number 3, schedule a time to sit with me or someone from my team to talk about your tax challenges. And when you're speaking to us, it's a free 30 to 45 minutes. You're going to sit with us so that we can walk you through during the tax challenges, to understand you so that we can be able to give you a professional advice on what will be the way forward. Each person, each taxpayer, they have a unique set of challenges. So having a one-on-one sit-in will be the best way to understand your tax situations. What you need to do is click the link below and schedule a free call to understand how to implement these tax strategies. Now, maybe you've gone through all this and you're wondering, is this really something for me? Do I qualify for that? If you are paying tax liability 30,000 and above, you own a business, this is for you. Having a free consultation can help you answer that question. Next question that we always get all the time is that, do you file our taxes then? Absolutely. We'll file your taxes. Once we have looked at the journey where you're going, then we can be able to structure it correctly. And at the end of the year, we can be able to file your taxes. Other question that has always come up in these meetings is, how much does it cost to work with you all your company? Great question. Every business owner wants to know how much, what is the expense. Most of my clients, what I've told them, it is not a cost. It's an investment. The time you sit with me, it is an investment for your future, for your business, for your growth, for your retirement, for your wealth building. That money that you're going to spend here, it's an investment. What if it doesn't work for me? Yes. What if I've sat with you, Daniel? I'm sitting down and this thing is not working for me. Absolutely. We will transparently express everything. We'll show you everything. Then from there, you can be able to make an informed decision whether this is right for you, whether it's going to work for you, or it's not going to work for you. But in the past, most of my clients who have sat with us, they have come to realize, many of them ask, why didn't I start 10 years ago? Why didn't I start 5 years ago? So this is the right time. Come, find out whether this is right for you, and then we can go next, okay? Other questions that our people ask us, what if I have partners? If you have partners, when you're scheduling an appointment, come with your partner so that we can understand the partnership. How are you structured? Who is involved in the business? Are you both involved completely, or there is one who is active and the other one is passive? So it really depends on your partnership structure. So when you sit with us, we're going to review all that, and then we can be able to tell you what will be the best option. Remember, it is free consultation, a free call that you're going to have with us, okay? What if I owe back taxes? If you owe back taxes, still we would like to sit with you and understand what caused that back taxes. Sometimes we have gone in and we have done a two-year back audit, and we have identified how we can be able to save you taxes, whereby we have to do what we call an amendment. So once you sit with us, we're going to understand what is your tax liability that you owe, what triggered it. When we review it, then we can be able to tell you what is the next step. A good example is one of my clients called me and she owed over $100,000 in taxes. So what I did, I reviewed their tax liability. What we did at that very moment is to call IRS and do a renegotiation. By making that one phone call, we were able to reduce her tax liability over $25,000 that she owed. Instead, she was going to pay. Now she can be able to invest and grow her business. Now, what will stop you from taking this step? Why will you continue paying in taxes over and over and over again? My call for you is this: sign up to understand what will be able to help you. You are afraid of making the wrong decisions. When your back is aching, what is your next step of action? Is to go see your doctor and find out what is the cause of my pain. Therefore, you're bleeding in finances, you're paying a lot of taxes. Why am I paying taxes? The other time I was speaking with one of my clients and paid over 80,000 in taxes and said, for the last 3 years, I've been paying this 80,000. Daniel, what can you be able to help me? And has a great tax accountant. Have been doing a great job. They did a great job, but only they were covering compliance. So we were able to sit with them and save him and structure their business correctly going forward so that we can stop that bleeding. So the decision still is yours, but making the right decision will always be the best choice. If you have an unanswered question, that is even the very reason that you would like to book this appointment so we can answer your unique question. All you have to do is one click that link below and schedule a free call to guide you in your next step in your business. Thank you.